Hey guys, thank you so much for watching this video. Please give us a call if you guys are looking to improve your credit score, lower your car payment, buy a car, trade in a car. If you're looking to purchase your first home, if you're looking to purchase a rental property, we can help you. Give us a call today, 877-205-7771. Talk to you guys soon, and thanks again.
Hello everyone, this is Calvin Russell here, CEO and founder of 850 Club Credit Consultation. I hope everyone is doing well today. Yes, I know it's been a couple days since I've done a video. It's been extremely busy, thanks to you guys, of course, the YouTube viewers, the subscribers. Of course, we are trying to, of course, we answer your emails all day. We answer your phone calls all day, so please keep them coming. We try to help as many people as possible. Also, if you haven't done so already, please feel free to schedule your free credit report evaluation. It's completely free. We don't try to sell you anything. We go over your entire report with you. And we also know that if there's any credit card recommendations we can make, we can do that as well too. Okay, so let's go straight into the video. But I just want to say thank you guys so much for making this into a much more successful company than I ever thought it would be. And thank you again. So let's talk about the top 4 things that people don't know. In my own personal opinion, they don't know that these affect their credit score. With a lot of clients, I've always, of course, answered various different questions. And a lot of times I'll get those random emails or text messages saying, hey, why did my score drop? And as I dig deeper into things, I'm starting to notice that there are 4 things that a lot of people don't know. And some things that I found out too along the way since I've been helping people for the past 6 years. Okay, so number 1 is student loan balances, right? For those who don't know, student loans do not help improve your credit score. They help generate a score because it is borrowed money that you have yet to pay back. But it's the only loan that can be deferred, okay? So while the loan is in deferment status, or it could be, even if it's in forbearance, even if you have a payment plan, it really doesn't matter what structure you have currently with your student loans. But if the as interest is growing on the loans, right, then of course that's going to make your overall debt amount go up. For those who don't know that, that does affect your credit score. Why is that? Well, the credit algorithm was never set up for student loans from the get-go, okay? With the credit algorithm, anytime someone has a balance and the balance is always growing, which we're going to get to as number 3, anytime the balance goes up, that usually means that a person is, not paying their bill, they're late or something like that. But in this case, it's the only loan where there is no, because in most cases, it's like if you are in deferment. I don't see it as much if you're on a payment plan per se, but most definitely forbearance or if it's in a deferment plan because it's interest and the balance is growing. The balance is growing, that's more negative debts. And of course, that's going to, unfortunately hurt your credit score. Now, some of you guys are probably like, well, I don't too much care about it anyway. Well, it does play a role. And of course, that's going to affect you every single month. But as long as you have enough positive things happening every single month, you're probably not even noticing it anyway. For example, let's say if you didn't do something, or let's say if you only have student loans in your credit report, you would easily notice that your score would kind of fluctuate because, of course, you do have, the fact that they're going to put an on-time payment on your credit report, right? But at the same time, you're still going to have a negative balance that's still increasing, okay? So that's number 1 is student loan balances, all right? So number 2, the number 2 thing is that people don't know affects their credit score is, it could be is or are because it depends on if you take out more than one, are consumer finance loans, okay? So now what is a consumer finance loan? A consumer finance loan is anytime you take out a personal loan that's not with a bank, okay? So it's more so like a bank taking a jab at your credit score because you didn't do business with them. That's my personal opinion, okay? Now, what's not my personal opinion is how it affects your credit score. Why does it affect your credit score? Number 1, a consumer finance loan, let's break that down. What is a consumer finance loan? A consumer finance loan is anytime you borrow money, it's not from a bank, and let's say, so it could be with, let's say, what's popular right now, payoff.com, prosper.com, avant.com, upstart.com, discover personal loans. There's Goldman Sachs, I think, has a personal loan program, American Express personal loans, Lending Club, it doesn't matter what you're going to borrow the money for. Oh, One Main Financial, what is that? Springleaf Financial, Lending Tree. All of those are consumer finance loans. Okay, so why does your credit score take a hit from that? Well, Consumer finance loans, of course, is not backed by necessarily a bank, but it's usually incorporated with some other bank. Like, for example, One Main Financial, if I'm not mistaken, is owned by Citibank. So technically that goes through their channel, but they still consider that a consumer finance loan. They look at a consumer finance loan because they're easier to get if you are not able to get traditional loans from, a traditional bank, I should say. So for example, if you need to borrow, let's say $5,000, $10,000, right? And then you went to your local bank, they denied you. 9 times out of 10, you'll be able to go with, let's say, any one of the places that I just mentioned. Now, everybody won't approve you, but again, a lot of them will, because they're going to give you a very high interest rate. Some interest rates as high as 38%. Sounds illegal, but it's not, okay? And that's the thing. No, they look at a lot of your assets. They look to see if you got a car, if you got a house. That doesn't mean that you'll get denied if you don't have those things, but the more assets you have, the more chance that they'll give you the money. They do not specialize, I repeat, they do not specialize in low interest rate loans. That's just what it is, okay? Though, of course, that's what banks are for. Banks don't like giving loans with an extremely high interest rate. That's why they give you consumer finance loans. Even payday loans, that affects your credit score negatively. Now, you're probably saying, well, Calvin, I saw my credit score go up when I borrowed money from, let's say, one of those sites you mentioned, or a payday loan or a speedy cash or something like that, right? Your score may have gone up because of the new account and because of the payment history, but it also took a dip that you probably didn't notice. So for example, a lot of times people see that their credit score went up 20 points, but it could have also been 30 points that your score could have went up, but of course something negative happened and you just happened to see that there were more positive points than negative points. The same thing happens with anytime your score drops. Sometimes there are positive things that happen as well, but there was more negative, there's more of a bigger negative impact than it was a positive impact, hence you saw a negative score drop, okay? So that's number 2. Number 3, this kind of segues into number 1, but this a lot of times people don't have student loans, and this still falls in the same category. And this is if you're a student, this is if you have a loan, for example, let's say an auto loan, right? Now, for those who don't know, late payments only show up on your credit report if you're 30 days late or more. So now what happens if you're 20 days late? You're going to notice that your score will drop. Why did the score drop? The score dropped because 9 times out of 10, they added a late payment, a late payment fee to your credit report, right? And then once they do that, the balance then goes up. Anytime the balance goes up instead of going down, because remember, the interest is already calculated in the auto loan, in the personal loan, in the, so in the mortgage loan. So anytime you have one of those 3 loans, not student loans, anytime you got one of those 3 loans, those balances are not supposed to increase any way, shape, or form. So now, does that mean that your score can't bounce back? It can most definitely bounce back. But again, if you're 20 days late, they may not show the late payment, because again, they only show 30 days late, but the balance will grow because of the late payment fee. And if it's $5, if it's $2, it doesn't matter what it is, especially if you have a Santander auto loan. For those who don't know, Santander, of course, in the United States. Now I know they do a lot of big business. I think in Europe, I believe it's in Europe, and but in the States, in the United States, they're one of the largest subprime auto lenders. But this is what they do: if you're late with them, then they do something in the loan where they damn near take it back to the original balance from when you first started having the car. It kind of sucks because you end up, I've seen clients where they've had the car for like 2 or 3 years and they borrowed $15,000 and they still owe $14,500 because they were late a few times. And it says in the agreement, if you are late, they will restructure that interest rate and you'll be stuck in that car for like a long period of time, which is another reason why you should refinance, which I got another video on that. So that is number 3. Just make sure that you're not late, 5 days late, 10 days late, 15 days late, and not expect a late fee, and then that's added to your credit report, and then of course the balance goes up. So now here's the thing about that. You're only going to notice this if you have credit monitoring, okay? So if you don't check your credit report that often, let's say once a month or something like that, you probably won't see it. But if you have something where you pay monthly and it's going to give you alerts, you're going to notice right away that your score is going to have some type of dip because of that. And I've had it sometimes where my clients say, man, my score dropped, what happened? And we're like kind of looking, and I found out, I was like, oh my God, were you like 10 days late? Say, yeah, was there a late payment fee? Yeah. $5 and make the score drop, because again, it's the balance is supposed to go down. Okay, so the number 4 thing is being an authorized user on an account with high utilization. Okay, so again, you most definitely want to stay away from being on somebody's account that they're using. I tell people all the time, if you're going to be an authorized user on somebody's account, please make sure they're not using this account, because I've had it where I actually have clients right now where we're going through the homeowner pre-approval process, and she's like, Calvin, why is my score, like, why does it suck? I said, well, your husband that's not going on the home loan, he has this GameStop credit card that you're an authorized user on that's maxed the hell out. I said, take yourself off of that account. Sure enough, she took herself off of that account. The score is going up. Okay, so you got to watch out for things like that. Do not be an authorized user on an account that has high utilization. That utilization factors into your overall utilization on your credit report. Okay, again, if you guys like this video, like it. You want to share it. And as always, please be sure to subscribe. I got a lot more videos on the way. I know I've been pretty busy, but again, I got a lot of material things I want to go over, within the next few videos or so. But thanks again for watching. Have a good day.